are going to have to make a choice that costs $50,000 to $10,000 anywhere, which you never expected. Most people don't know it is happening. In April 2026, gold is currently trading at about $4,800 an ounce, nearly $2,000 higher than last year. Everyone wants one. But what drives me crazy is that almost everyone I talk to has it the wrong way. Some people throw money into gold personal retirement accounts they don't understand. Others buy physical gold and hide it in closets like buried treasures. Both put money on the table. Today, I will analyze in detail the actual differences between gold individual retirement accounts and physical gold ownership. When you see real numbers, not just advertised numbers, how much each price will cost you, and most importantly, which method is appropriate for your specific situation. By the end of this step, you will know exactly where your gold should live. What is a gold IRA? Golden IRA sounds great, but once you get rid of the marketing noise and see what you really get, the core concepts are not complicated. It is basically a self-directed individual retirement account that holds physical precious metals rather than the typical stocks, bonds, or mutual funds that most people hold. This self-directed part means you're deciding what to buy, not some robot consultant or fund manager making decisions for you. The IRS now has very specific information. The gold entering the IRA cannot be just any gold sitting there. What we call gold bars meet strict purity standards. To be precise, at least 99.5%. American Golden Eagles are an interesting exception to this rule. They are only 91.67% pure, but the IRS still allows them, which most people don't realize. Rare collectible coins or antique gold coins from your grandfather's collection do not qualify for the IR. We are talking about standardized investment grade metals such as gold bars, American Golden Eagles, Canadian maple leaves, and so on. And this part is completely unprotected and cannot be stored at home. Let me repeat, because it is important, your IRA gold can't be stored at home. This is not advice or guidance. This is the IR's rule with real teeth and serious consequences. If the IRS discovers that your pension is stored in a safe in your bedroom or in a safe under your personal control, they treat your entire account value as a distribution. We re-talking about an income tax on everything, plus a 10% early withdrawal penalty if you are below 59.5. Some people don't realize this until they're inside, and then you can't recover the damage. So where did it go? Enter an IR's approved custodian, a secure third-party vault facility. It is your IRA custodian, not you, who really owns the metal. You own them, but you don't own them. The crucial distinction between owning something and actually controlling it is one that most gold IRA ads ignore entirely. Once you work with dealers, it usually takes 2 to 3 weeks to set up. You open an account to fund it through extensions or contributions. You choose the metals you want, and the trustee buys and stores them for you. This is the basic structure. This is a tax-free retirement account, but it does not hold shares, but physical gold. These tax advantages are related to infrastructure costs that most people don't expect. Physical gold ownership, simple path. The alternative is simple. You just buy gold. You own it. You own it. You own it. You own it. No, IRA packaging, no custodian, no vault. Walk into a dealership and buy a gold bar or a coin and they're yours. You can hold them in your hand. Keep them safe at home if you like. This is the main attraction. You actually own this thing, you control it, and nothing can stop you and your gold. Buying physical gold is not complicated. You pay a premium over the spot price, usually 3 to 5%, depending on which distributor you work with. Gold belongs to you. You decide when to sell it. If you want to move, that is your choice. The psychological part is also important. Holding real gold has a sense of security, but looking at digital accounts does not. This is not weakness. It is just how people deal with the reality of security. But there are serious downsides too, and most people don't think about it carefully before they start accumulating large amounts of physical gold. Once you have a fair amount of gold, maybe $50,000 or $100,000, storage and security become issues. You can't leave it at home. Your homeowner's insurance may not fully or completely cover gold bars. Your regular safe can be breached. Your house could burn. You create a concentration risk that gold does not exist when stored in a specialized vault. The second is liquidity. Selling physical gold means finding buyers, handling goods, arranging insurance in transit, and paying verification fees. It is not like a stock sale that can be completed in seconds with the click of a button. We're talking about days, sometimes weeks, depending on how much you move, during which time the market can be bad for you. The tax situation for physical gold is more complicated than most people think. If the holding time is more than 1 year, the long-term capital gain rate applies, which is a good thing. But the IRS classifies gold as collectible, meaning that your long-term gains will be taxed at 28%, not the preferential 15% or 20% you pay for other investments. That is a striking difference. Don't forget that dealers on both sides of the deal are raising prices. When you buy, you pay more than the spot price. When sold, the dealer's purchase price is lower than the spot price. Spreads can range from 3 to 5% for inflows and 3 to 5% for outflows. Of the $100,000 investment, this could be $10,000 of the total transaction cost before inflation, before market volatility, before any other factor, before tax. Physical gold seems simple, but simplicity does not mean efficiency. Implicit cost structure. So you've chosen one path or another, and now let's see how much it costs when you tear up the marketing language and look at the real numbers. Gold IRA is where hidden costs really pile up. So I want to talk about it completely and directly. Setting up Gold IRA requires a one-time setup fee, usually $50 to $150, depending on your provider. Some companies claim it is free, but that just means they apply it to your first deal or pretend differently. Whatever happens, there is a price. Then you get a premium from the trader, the price you pay for gold above the spot price. Typical price increases range from 3% to 5% of the $50,000 purchases. $1,500 to $2,500 disappeared immediately on the first day, even a week before you got the gold. Then came the annual management fee, which began to accumulate. These fees typically range from $75 negative $300 a year, depending on whether the custodian charges a flat rate or a percentage of the assets under management. Some suppliers charge both, not one or the other. In addition, there is the cost of storage. This is not optional. It is mandatory, and people really underestimate the impact. Storage costs typically range from $100 to $300 a year in six-figure gold positions. The situation has become more complex. You may also encounter trader fees for specific transactions within the IRA, which increases any metal purchase by 5%. If you move from one custodian to another, you pay an extension fee. If you decide to liquidate everything, close your account. When you finally liquidate and distribute, you don't get the spot price. In the selling spread, you can get a few percentage points from spot. Let me show you the actual math here. $50,000 goes to a gold personal retirement account. On the first day, a $50,000 deal plus a 4% dealer bonus would cost $2,000 right away. The installation fee will be increased by another 100 yuan. You are immediately -40, -100. First year fee, management fee, 150 yuan, warehousing fee, 200 yuan. The first year totaled 4,500 yuan. In years 2 to 10, assuming you don't have additional deals, you pay $350 a year, add 10 years, and the total cost of the initial $50,000 investment is about $4,500. This means that 9% of initial capital will disappear into cost before taking into account inflation, market volatility, or taxes. Physical gold works differently. At the time of purchase, you have received a premium of 3 to 5% from your dealer, $50,000 or $1,500 to $2,500. Storage can become expensive if you don't leave it at home. Private vaults charge $300 to $1,000 a year, depending on how much gold you store. Or you leave it at home and take your own insurance and safety risks. At the time of sale, there is still a price difference between 3% and 5% of dealers in the sales process. So add 50,000, 1,500 to 2,500 more. If you leave it at home and don't save it for 10 years, the transaction cost alone is about $4,000 to $5,000. When you finally sell, add the taxes and remember that as a collectible, that is 28%, and the photos become more expensive. Neither of these cost structures is as simple as I would like them to be because they are fundamentally different. Bottom line, both paths have real costs, and most people never really calculate them before committing. Tax treatment, that is the real advantage. The difference between the two options for making real money is that most people are completely missing opportunities. Gold IRA gets retirement account tax treatment. That means there are a few things in your favor. In a traditional gold IRA, contributions may be tax-free depending on your income and whether you already have 401k at work. But more important, account growth is not taxed annually. As gold rises, you don't have to pay an annual capital gains tax. You pay taxes only if you actually accept the distribution, which is considered ordinary income in this regard. Roth Gold's IRA operates differently. Contributions are not deductible, but if you follow the rules, each increase is fully tax-free. Take the distribution after 59.5, for example, and your return to the IRS is zero. That is really valuable for those who think gold will appreciate significantly in the next 15 or 20 years. Your position may double, and If you hold Ross options, you don't owe the government $1. Physical gold is classified as collectible, meaning a 28% long-term capital gains tax, combined with state taxes. The combined tax rate in places like California or New York would be close to 40%. Here are the actual numbers. You buy 50,000 gold. A decade later, gold appreciated 30%. Your current position is $65,000. So you make $15,000. What if the money is in Ross Gold's personal retirement account? You owe $0. 65,000 is yours. If it is physical gold you personally own, you owe 28% of federal debt plus about 5% of state debt. That is about $4,200 in taxes. You make a net income of 5,800 yuan instead of keeping all your income. Now, extend that time to 20 or 30 years of accumulation, especially if you regularly contribute to the Gold IRA. That compound tax advantage turned into a sizable fortune. We're talking about the tens of thousands of dollars in tax differences between the two approaches. But the important thing is that it works only if the rules are truly followed. Gold must be deposited in an approved depository. You have to allocate according to the IR timetable. You can touch it before 59.5 unless you encounter a specific anomaly. Physical gold gives you total control and access to everything. But when you sell gold, you are hit by taxes. Gold IRA can save you a lot of taxes, but you lose control and instant access, and those costs keep coming. Tripping rules. I mentioned some rules, but I wanted to be specific about what tripped people up because I saw people make these mistakes and they paid a real price. The first rule is no trading. In the Gold IRA, you cannot use gold as collateral for a loan. You cannot borrow from the IRA. You cannot sell your gold collection to the IRA. And you cannot use IRA funds to buy gold and store it at home, even if you believe you have received a fair price. The IRs will not forgive any prohibited transactions, which will immediately tax the account in full and impose a fine. You don't have a second chance. The second rule is home storage, and I really work hard because it is the most common mistake people make. If your pension is at home, the IRs can treat the entire account as a distribution under recent case law, especially last year's McNulty case. We re-talking about a full income tax on the value of any account plus a 10% penalty. I've seen people do it accidentally. They think they're smart, but they're not. The IRS has been very active in implementing home storage in 2026. The third rule deals with purity standards. Not all gold is acceptable to the IRA. It must be 99.5% pure, or like the American Golden Eagle, an official gold coin. The coins you collect don't count. Your gold and silver don't count. Your grandmother's jewelry doesn't count. We're just talking about investment grade gold. The fourth rule is the custodian's requirement. You cannot be the custodian of your personal account. Some have tried to circumvent the problem with checkbook IRAs or LLCS. To be sure, the IRS has repeatedly ruled that these structures are untenable. Your custodian must be a separate entity, bank, or trust company, or a professional precious metals custodian. Rule 5 deals with the minimum allocation required. And once you reach 73, you have to start taking on tasks. It doesn't matter if you don't want to sell gold now, because the IRS requires you to take out the money. Skip this step and you will be fined 25%. The sixth rule is about penalties for early withdrawal. You are less than 59 and a half. Do you want the money out? You pay regular income tax plus a 10% fine. There are exceptions, the difficulty distribution and the conventional 72T distribution, but these are specific and complex. These rules exist for a reason. They are specifically used in the tax code to stop people from abusing the IRA, but breaking them has serious consequences. Physical gold doesn't need to navigate that. You own it. Do whatever you want with it. The only rule that applies is the tax rule, which is much simpler. Pay any premium you want when you buy, sell when you sell, and pay capital gains when you sell. Which one should you choose? The honest answer is it depends on your situation, because both may be right. Just for different people, if you're in a relatively high tax bracket and you want to minimize taxes on investment income in the long run, you may want to start a gold IRA because tax advantages combine to become a real currency. If you really don't want to deal with storing and protecting physical gold on your own and are willing to pay for convenience and professional management, the IRA makes sense. If you renew from 401k or another retirement account and you have enough money to make it worth it, the setup costs will become more forgivable with a larger account. If you want to automate regular gold purchases, perhaps averaging dollar costs into gold over several years through IRA contributions, and want this growth to be combined with tax-free or deferred taxes, then this structure is right for you. If you are buying a small amount, maybe $50,000 or less, and the percentage charge is less important in absolute terms, you may want to stick with physical gold. If you want immediate liquidity and the ability to get gold quickly without waiting for a custodian to process it, physical gold will give you that. If you're skeptical of safekeeping and just want real assets, I understand that mentality, because some people really sleep better at night with stuff. If you want to avoid any possibility of conflict with complex IRS rules, physical gold will remain simple. You're just an ordinary person with assets. If you have run out of retirement contributions and want to hold additional gold outside the IRA framework, entity ownership is your only option. There is actually a hybrid approach. Some have both gold personal retirement accounts with retirement capital and physical gold held for layoffs because they want to actually own some of it. It makes sense if you have enough capital to make both approaches worth trying. But here is what I'm telling you. Don't let Gold IRA's marketing force you to make decisions you're not happy with. These companies spend heavily on advertising, especially reaching people over 55, and are very good at making the Gold IRA sound like the obvious right choice. Maybe, but maybe not for you. Nobody talks about things. There are a few things I would like to point out that the industry deliberately doesn't emphasize it because it hurts their sales numbers. First, gold itself does not generate revenue. It pays no dividends. It does not generate cash flow. Right there, the only way you can make money is to raise prices. Here is what the data show over the long term. Gold has appreciated by an average of 4-5% a year, depending on the time period you see. Never mind. That makes sense, but it is not spectacular. You have to really believe that gold will continue to appreciate, or that this is a necessary portfolio hedge until both options make sense for your money. Secondly, the inflation protection narrative is strongly promoted by the Gold IRA. Historically, gold has fluctuated with inflation, but this is not guaranteed every time. When Paul Volcker ran the Federal Reserve in the 1980s, gold was effectively crushed by inflation because real interest rates were so high that bonds and cash became more attractive. Inflation protection is a feature of gold, but it is not automatic. Third, custodian risk is rarely discussed. You believe that third-party companies will really save your gold, not lose, not misappropriate, not fall. The custodian has insurance, but coverage is limited. If you make a catastrophic mistake, you may get back 60 to 70% of your account S value, not 100%. Gold should be in vaults, but you believe the custodian is telling the truth. You can ask for an audit, but you're not there every day. Fourth, liquidity mismatch may cause problems. Gold IRA sometimes has sales processing delays. If you need money and want to liquidate your position, it is not immediate. Depending on the custodian's backlog and the size of the merchandise you sell, you may wait days or weeks. Fifth, the tax code could change. At present, the Gold IRA receives preferential tax treatment. Congress could pass legislation to change how those accounts operate. This has happened before in other investment types and can happen in precious metals. I don't think so. But living in an unplanned environment is a risk. Last thought, you see, there is nothing wrong with holding gold. Whether it is held through the IRA or as physical gold, gold can absolutely be part of a diversified portfolio. The question is, which structure makes sense for your specific financial situation? Do the math. Calculate the actual cost. Understand the tax implications of the situation. Consider your age, other assets, timeline, and your fitness for complexity. Please don't let Gold IRA salespeople make this decision for you. They have a financial incentive to put you in an IRA because they get a commission. They have an incentive to move money. You need to make decisions based on what is really right for you, not what is right for their bottom line. If you think it helps, I'm really grateful that you pressed the like button because it helps the algorithm find answers for others. And I know that thousands of people are now considering exact decisions. If you have questions about your specific circumstances, please raise them in the comments. I read through these things and I will do my best to respond. Thanks for watching. See you next time.